Welcome everybody to Market Chart Watch. Today is April 14th. It's 10:18 p.m. and we're going to be looking at the after hours trading on the SPX, SPY. We're going to look at the VIX 30-year yield, the futures contracts for the S&P mini, and some pre-market data to see what the implied move will be for tomorrow and in which direction the market makers think it's going to go. So again, we're going to start at the 30,000 foot level here, looking at the SPX, the S&P 500 index from about 2018 all the way to now, 2025. And again, you can see I have some trend lines put in here. This blue upper trend line is our resistance, and this lower blue trend line has been about 7 years of support. We also have some volume indicators like this yellow 200-day moving average, and some white lines, horizontal white lines, which dictate some price action movements of the COVID high, 2022 low, those coincide, the 2022 high, and some other areas of support and resistance within the last year. So let's sort of zoom into those and take a look and see sort of what's going on. So as you can see, we had huge couple of days with the tariff pausing news, and because of the rejection of the support area off the 200-day moving average and the 2022 region. So we had a ton of support here. But what you'll note is on this candlestick for this week, you can see this candlestick has hammered right off of this level of support. We have two very large touches here. This makes a third touch, and that provides us with a ton of support. Now, if we look at this and we just scale this as a support metric to the upside, our first level of resistance would be another 5% to the upside. Okay? And if we were to do the same to look at the bear market, our first level to the downside would be about 2.5%, and then about 8%. Okay? So I just want you to keep an eye on that. We're still showing oversold on the RSI and pretty much level weighted volume on this index. Let's bring this in a little closer though, and I want to look at the daily chart. So again, you can see here, we're just bringing this price action in a little closer, and I just want to show you how close we are exactly to the T on that support region. You can see here that candlestick, we have basically stopped trading right at that level of support. We also hit that support here, although we did not hold. And then this has previously been a point of support here as well, along with resistance back here. So a couple of touches. This isn't a super important area, but it is one single area of support on this chart. Okay. Now we're going to bring you in even closer. Now we're going to look at this isn't even hourlies now. We're looking at the 15-minute chart on the SPY, and we'll give you a bigger look here. So we're just going to be looking over a couple of days, okay? And what I've drawn in here in the purple is our areas where we've had some large gap fills. So this first one here was the tariff pause, and I'm going to call that a fair value gap here just because that 10% move was massive, okay? And then we gapped overnight in after hours trading up here, which created a point of support or resistance. And then we actually, a couple days later, did another gap fill right here. So all three of these purple boxes represent some form of a gap fill, either in after hours trading or during the test here. And so what I wanted to note is with these gap fills, typically you're going to have support and resistance in these areas as the stock tries to get back within them or break out of them. And so what we noticed with today's move, if you watch my video from yesterday, you know that we called this move to a T, this 2.1% implied move. We're going to break into a gap fill, and then we're going to retest. We had talked about this in last night's video. Well, that all happened, obviously, and we had a play where we called a call contract here, played that to the upside, and then we sold right at the resistance point here for a 4-point move with a delta of 65. Okay, so that's about a $250 price improvement per contract on SPY. Now, if we look at what's happening after hours, this doesn't paint the whole picture, right? So we only have a small region here of after hours trading, but what we can do is we can extend this by looking at our futures contracts. So let's go ahead and do that. We're going to pull the S&P Mini 500. This is the futures contracts, and if you don't know, futures, they trade basically 24/7 except for Saturdays. And if we look at this timeline here, you can see that this is trading up until, well, right now. That is right now's time, about 2200. That's about 10 p.m. Okay, and what we've noticed here is that just in this 2-day move, we have formed a small parallel channel. It only has 1, 2, 3 touches, but 3 touches is enough to give us just a very basic move. But what's even more important for me is that the volume here has really dropped down. Okay, so we're not seeing a ton of volume here. And so why is there not a ton of volume here? Well, if we take a look at our volatility index, we also gapped down on that today. So we gapped down on the volatility index, and as you can see, we went from yesterday from a 37-point volatility index down to 30. So that is a pretty substantial move in one day, okay? And the lower the volatility index, the lower the implied move is going to be. Let's take another macro scale picture here of everything before we make our determinations. And we can see that on the 30-year Treasury yield, we have the bond yield is decreasing today. So that's what the government actually wants, because they have to refinance their debt this year to the tune of $10 trillion, about 30% of our debt we need to refinance. So the government wants this to come down. I have a theory that they were doing all this on purpose, but we won't get into that. And so what we've noticed is the yield has been going up for quite some time, but it's starting to trend downward now over the past couple of days. And as we know, if the bond yield is coming down, that means the prices of bonds are going up because more people are maybe starting to funnel money into bonds. Think of it like a house. The more a house costs, because lots of people want to get into them, the more attractive loans are going to be at a lower rate in a normal world. So this yield is coming down, the price of bonds is going up, and that basically means that people are putting money into bonds. So what have we painted as a picture so far? Well, so far we've painted that we've hit a level of support, albeit a small one. We have substantial downside, pretty good upside. When we take a closer look at the chart, we can see that we're sort of consolidating somewhat. So we're having some bigger moves going into smaller moves, and we're currently inside of a gap fill. So this is going to want to test one or the other direction. And let's say we wanted to test this direction to the tune of, it'd be almost a % move in one direction, and about another % move in the other direction. So about a % implied move in each direction if we're just looking at technicals. The same can be said here because this is working off the same chart. There's not a bunch of volatility here. The VIX has described that the volatility is going down. The yield has described that the volatility is going down. So let's take an actual look at the implied move in the markets and see what they are considering. So when we look for an implied move, we're going to take the at the money strike of the SPY index. That's what we're looking at. So we have SPY, last sold was 539.12, and we're going to look for tomorrow's date. So we're going to look at 539 since that's the closest strike price. We're going to take the ask of 349, and we're going to add that with the call side ask. We're going to add with the put side ask of 398. And what you'll notice is that the ask price for the put contract is about $50 more, $49 more to be exact, than the ask for the call side. And so what this tells you is that the market makers have priced in a premium for the put contract to be purchased, which means it will cost you more money to buy the put contract for tomorrow's SPY index. And that means that the market makers have priced in that it is more likely for the S&P index to go down tomorrow than it is to go up. All right, so just keep that in mind, that they've priced in a higher price for the put contracts than they have the call contracts. And so if we take those numbers, we add them up, we get 747. We're going to then multiply that by the median, 85%. And then we're going to divide that by the strike price of 539 to get our implied move. That implied move is looking like 1.17% in either direction. However, the direction being noted here that's higher, that has a higher likelihood, is right here on the put side. So a 1.17 move, implied move, let's take a look at what that looks like. If we look here, if we look at before market trading occurred after hours, we can look at about a 1% move. So we're basically testing dropping out of this channel, okay? Is what the market makers have predicted. Now, if we come over here and we look at this move, you can see we're looking at the same thing after hours, about a 1.25%, 1.17, 1.25. We're in the same ballpark here. But basically, the market makers have predicted that we would likely try to do something like this, okay? They're looking at a move. Let's refresh this page. Sorry, guys. Okay, so that move is going to look a little like this. Market makers have said that we're going to be testing a 1.17% move, and you can decide which direction that's going to be, but they've priced it in to the downside as being more probable. And that downside looks like it would be testing this giant gap fill. Now, my guess is, based on the trend, and I am not a financial advisor, and this is not financial advice, but since we've been forming this trend to the upside, it is more than likely that we'll hit that shorter term minute chart 200-day moving average and reject and continue upward. But what you'll also notice is, as we're drawing this, we're basically forming an ascending triangle. So if you like to play technicals, this right here is an ascending triangle. So you've got the same level of highs with lower lows, which means that the sellers are getting stopped out more and more and more and getting crushed by the buyers more and more and more until pure consolidation. And what typically happens after this move is a jump to the upside, and it's usually pretty substantial. Now, if we read this incorrectly and this is actually a falling wedge pattern, then we would trend to the downside. But it appears for tomorrow's move, per the market makers, they are suggesting that we are not doing this, but we are going to try and test here. And what I think is going to happen here is that we will make that move, retest, and then probably come up to the top of this parallel trend channel. And one of these days, we're likely going to break it to the upside based on the larger scale move. Okay? So what is the pre-markets actually saying? Because we just did all the research ourselves. Let's take a look. So pre-market data, let's take a look here. Let's go back to this is the normal page you'd see at CNBC Finance. So they're saying U.S. stock futures slide after S&P 500 post back-to-back gains. They're saying the futures are dropping. It's negligent, about a 0%. So we're pretty much hovering flat. This makes sense given the VIX hovering down, given this resolving towards normal, and then given the fact that in after hours, there's not much volatility here. So that all makes sense. That pans out. But what we've pointed out is a likely move of 1.17% to the downside priced into the options market somewhere towards this gap fill with a likelihood, in my opinion, And I'm not a financial advisor or a technical analysis, but in my opinion, that would bounce off of this, attempt to hit the top of this ascending triangle, and then leverage to the upside just based on the larger scale move. Because larger scale move, if we look in history, if we go real large scale, you see any of these moves towards the lows, you trend up, lows, trend up, lows. We still got a ways to go until we're trending up to where it has previously. So that's my take on what's going to be happening tomorrow morning on April the 15th. Again, we'll see if this technical analysis of the S&P index is correct based on the data that we have concluded. Thanks for watching these videos, you guys. Like, share, and subscribe. And we'll see you tomorrow evening.